I think that demonetizing gold gets you to 500,000, and that's simply pulling all the monetary energy off of the gold rock from gold bugs who believe that gold is a store of value and a safe haven. But it's important to note there are a lot of organizations and a lot of investors that don't use gold as their safe haven. They use government debt, sovereign debt. And so cash is a safe haven, and sovereign debt is a safe haven. And another safe haven people use as a store of value is an index fund, bond index funds and stock index funds, like the Russell 2000, the S&P 500, the Dow index. So all told, I think there's between $300 and $400 trillion worth of fiat instruments, cash, debt, stock, commercial real estate indexes, something in that range. They're all, if you look at all of that, half of that monetary energy, maybe more, between 50 and 75%, is simply seeking a store of value as a container. Like when I buy the S&P 500 index or the Vanguard fund, I'm not buying it because I equally love all 500 S&P stocks equally in proportion to their market caps. That's not why I bought the index. I bought the index because I had $1 million and I knew if it was cash, it would be debased in purchasing power. And so I needed to put it into something which was going to return more than the economic hurdle rate or the cost of capital. So some people choose to preserve their wealth by investing in gold. Some people choose to preserve their wealth by buying land, a land bank. I'm just going to buy a bunch of farmland. I don't love it. I just bought it. Some people choose to preserve their wealth by buying debt. Like there's like $100 trillion worth of sovereign debt, right? 10-year treasuries, 30-year treasuries, 3-year, 1-year treasuries. There's like $17 trillion worth of debt that's negative yielding. I think the last number I saw. Why would you buy a bond that you have to pay to own? Right? Isn't the obvious answer? It's a safe haven. Is that right? I don't want to bury the cash. I don't want to hold cash. I don't want to bury the cash under my mattress. I don't want to hold metal. And so I'll buy a bond until I figure out what to do. So ultimately, the amount of monetary energy in the world that's looking for a safe haven store of value is got to be between 100 trillion and 250 trillion. Like why not all of it? Like why not 300 trillion or 350 trillion, if whatever the total sum of everything? Well, the answer is at the right price, I would own a stock because I believe in the stock. Like for example, Tesla. If you bought Tesla at the beginning of the year, it went up by a factor of 5. And if you love Tesla and if you believe it's a growth stock, then you invest. You're making an investment decision. I might make an investment decision in a stock that I thought was going to grow faster than the cost of capital. If you believe that a stock can grow its revenues and its cash flows more than 20% a year, you should probably own the stock, right? If the stock is going to outperform the cost of capital. If you came to me and you asked for a loan and you were going to erect a hospital, and I lived in the city, and I had kids and we needed a hospital, and I was a wealthy person, I would give you the loan, I would buy the bond so that you could build a hospital so that my family doesn't die if they need the hospital. So sometimes creditors would issue credit because they have a passionate belief in the project. And equity investors would invest because they have a passionate belief. That's investment, and that's true crediting. I mean, credit and equity investments. And the same is true with real estate, right? I might buy real estate to live in. I love it. Or buy a commercial office building to put my company in, or a factory. On the other hand, when I'm buying the index of 187 companies I never heard of that yields me 2% or 3%, I'm just looking for a store of value. So that's a long-winded answer to the question, which is, is Bitcoin worth more than the value of gold? And the answer is, yeah, in theory, all monetary energy that's simply looking for a store of value safe haven index should presumably drain out of real estate, cash, stocks, and bonds into the Bitcoin network. And as that happens, the price discovery will return to real estate and bond, right? A real bond should not pay you 0% interest, right? A real bond should not charge you money to own it, right? That's offensive. So, so the bond values will fall, the equity values will fall, the real estate values will fall, the yields, the dividend yields, the rent yields, the bond coupon yields, they will go up until a rational actor would choose to own those as an investment, or a person that's a passionate investor will own them because they're trophy assets that they simply wish to own, to say they own them for their own personal purposes. And the rest of the monetary energy really ought to be in a Bitcoin network because it's a pure index of the economy without counterparty risk, without execution risk, without credit risk, without debasement and political risk, without the tax risk, et cetera, and the political risk. That's why that makes sense. And that means that the top is more than 100 million. More than 100 trillion. It's somewhere between 100 trillion and 300 trillion in today's money. And of course, if we look out 5 or 10 years, there may be 700 trillion in today's money then. So if half of the monetary energy sits in a store of value index, then it could be 300 or 400 trillion dollars.